Good day, Nigeria. Nigeria has officially been removed from the European Union's list of high-risk third countries for anti-money laundering and counter-terrorism financing, and this is absolutely massive news for Africa's largest economy. The European Commission announced this decision on January 15, 2026, marking a significant turnaround for Nigeria's international financial reputation and opening up new opportunities for businesses, investors, and everyday Nigerians looking to engage with European markets. This removal means that Nigerian financial institutions and businesses will no longer face the intense scrutiny and additional compliance requirements that came with being on that list. For years, being on this list made it harder for Nigerian banks to process international transactions smoothly, increased costs for businesses trying to trade with European partners, and generally put a cloud over Nigeria's standing in the global financial system. The delisting is not just a symbolic victory, but a practical game changer that will make life easier for anyone in Nigeria who needs to move money internationally or do business across borders. The journey to this point has been long and required serious reforms. Nigeria had to prove to the European Union that it had strengthened its systems for preventing money laundering and terrorist financing. This meant updating laws, improving regulatory oversight, enhancing the capacity of enforcement agencies, and demonstrating real commitment to transparency in financial dealings. The Nigerian government worked closely with the Financial Action Task Force, the global watchdog for financial crimes, to address the concerns that led to the country being placed on the list in the first place. Think about it like being on probation and having to prove you have genuinely changed your ways before restrictions are lifted. What makes this particularly exciting is the timing. Nigeria's economy has been facing numerous challenges, from currency pressures to inflation concerns, and this positive development comes as a breath of fresh air. European businesses that might have been hesitant to invest in Nigeria due to compliance concerns now have one less reason to hold back. Banks in Europe that had to treat Nigerian transactions with extra caution can now process them more smoothly. For Nigerian exporters trying to sell products to European markets, the removal of the stigma could mean faster payments and fewer headaches with international banking procedures. If you are finding this information valuable and want to stay updated on more news that affects Nigeria and Africans across the continent, please take a moment to like this video and subscribe to the channel, because we are committed to bringing you the stories that matter most to your everyday life and future. The implications extend beyond just business and banking. Nigeria's international reputation gets a boost from this decision. When potential investors or partners research Nigeria, they will no longer see it listed alongside countries considered high risk for financial crimes. This psychological shift matters because perception influences decisions. A country that is seen as cleaning up its act and meeting international standards becomes more attractive for tourism, foreign direct investment, and even diplomatic partnerships. Young Nigerians studying abroad or seeking opportunities in Europe might find it easier to navigate financial requirements when their home country is not tagged as high risk. The European Union's list of high-risk third countries is not something taken lightly. Countries on this list face what is called enhanced due diligence, which basically means every financial transaction involving these countries gets extra scrutiny. Banks and financial institutions in EU member states have to do more checks, ask more questions, and generally treat transactions with heightened suspicion. This creates delays, increases costs, and can sometimes lead to transactions being rejected altogether. For Nigerian businesses trying to compete globally, these barriers made it harder to operate efficiently. Now that these barriers are being removed, Nigerian companies can look forward to competing on a more level playing field. The announcement also reflects well on Nigeria's current economic leadership and the institutions that have been pushing for these reforms. The Central Bank of Nigeria, the Economic and Financial Crimes Commission, and other regulatory bodies have been working to modernize Nigeria's financial crime prevention systems. This recognition from the European Union validates those efforts and shows that sustained reform work does pay off. It sends a message to other African countries facing similar challenges that meeting international standards, while difficult, is achievable and worthwhile. For ordinary Nigerians in the diaspora, especially those in Europe, this news could translate to easier remittance processes. Sending money home to family members might become smoother and potentially less expensive as banks reduce the compliance costs associated with Nigerian transactions. The removal from the high-risk list does not guarantee immediate changes in every transaction, but it creates the conditions for improvements over time as financial institutions adjust their procedures. Looking at the bigger picture, this development is part of a broader trend of African nations working to integrate more fully into the global financial system on better terms. Rwanda, Kenya, and South Africa have made similar efforts to strengthen their financial governance systems, and Nigeria joining this movement reinforces the narrative that Africa is serious about transparency and international cooperation. The continent has often been painted with a broad brush when it comes to financial crime concerns, so each country that demonstrates improvement helps shift perceptions for the entire region. The work does not stop here, though. Nigeria must maintain these standards and continue improving its systems to ensure it does not end up back on any watch lists. Sustaining reform is often harder than implementing it initially because it requires consistent effort and vigilance. The institutions that fought to get Nigeria off this list will need continued support and resources to keep the country's financial systems clean and transparent. This is not just about impressing European regulators, but about building a financial system that serves Nigerians well and supports sustainable economic growth. If you have made it this far and appreciate getting this kind of detailed breakdown on important developments, don't forget to subscribe and turn on notifications so you never miss updates that could affect your business, your finances, or your understanding of what is happening across Africa. This announcement from the European Union represents a win that Nigerians should celebrate while remaining committed to the ongoing work of building stronger institutions and maintaining international trust. The practical benefits will unfold over the coming months and years as businesses and individuals discover what opportunities this new status opens up for them.